Hi, today I would like to talk about one investment terminology. It's called the market capitalization. Market capitalization in short is called market cap. So what does market cap mean? We often hear people saying that, this particular stock has a very large market cap, or there's a small cap stocks. So what do they mean? Okay, so there's a formula behind it. The formula is the price, the current market price, times the number of shares. Say, for example, Maybank current market price is 10 ringgit, and then the current outstanding number of shares is 10 billion. Okay, 10 billion outstanding number of shares. So what is the market capitalization for Maybank? Will be 10 ringgit times 10B will be equal to 100 billion. Okay, so this will be the market cap for Maybank. So there are various types of category for market cap. So let's take a look at the following categories.
The term cap is the short form for capitalization, which is the market value or market capitalization of a stock. There is no fixed definition for this. However, as a general guideline, large cap stocks are large, with at least 10 billion ringgit worth of market capitalization. These companies often keep large reserves of cash to take advantage of new business opportunities. Because of their large size, large cap stocks are usually blue chip companies that are not expected to grow as rapidly as smaller capitalized companies. However, because they pay good dividends consistently, investors are often attracted to large cap stocks. Large market cap companies are usually the favorites of institutional players, as they provide sufficient liquidity in the market. Mid-cap stocks are typically stocks of medium-sized companies between the range of 2 billion to 10 billion ringgit. Some of them have the qualities of blue-chip large-cap stocks, but with a smaller capitalization. They usually have been in business for decades and have steady growth and good track records. Mid-cap stocks also pay good dividends to their shareholders. Small-cap stocks are small companies with less than 2 billion ringgit of market capitalization. Many of these companies are relatively new and have the potential to grow rapidly. As small-cap stocks emphasize growth, they are likely to forego paying dividends to the investors so that profits can be reinvested for future growth. Small-cap stocks are popular among investors who are looking for growth rather than dividends. If successful, these investments can generate substantial gains. Blue chips are stocks of well-established and stable companies. Typically, they are from financially sound companies that have a good record of producing earnings and paying dividends in both good and bad times. The term blue chip stocks is derived from poker, since the poker chip with the highest value is blue. Most of the 30 companies that make up the FBM KLCI are in this category. Among these, Genting, Maybank, CIMB, and Public Bank are examples of large-cap blue-chip stocks. Carlsberg, Tan Chong, and Guinness Anchor are examples of mid-cap blue-chip stocks. Growth stocks are stocks from companies that are in the high-growth sectors, and the business is expected to expand rapidly over the coming years. The earnings are expected to grow at an above-average rate relative to the market. A growth stock usually has a high PE ratio and does not pay much in dividends. Examples are technology companies and biotech companies. Penny stocks are priced below their par value. Most of them are risky and unpredictable, and investors should avoid them. Just because a penny stock is trading at pittance does not mean it's cheap. For all you know, it has negative earnings and may be delisted at any time from the stock exchange. Defensive stocks will defend your portfolio from severe setbacks and will remain stable under difficult economic conditions. Defensive companies are those whose businesses are not highly dependent on economic ups and downs, such as food, tobacco, oil, gaming, and utilities companies. Hence, they tend to hold up during hard times and lag behind the rest of the market during economic expansion, as the demand for food, oil, and utilities consumption are quite stable. Defensive stocks are seen popular among investors during an economic downturn. Examples are Magnum, Berkshire Sports Toto, Genting, Telecom, and Tenaga National.